So in today's video, I'm going to go over everything you need to know about FHA loans, the complete guide for first-time homebuyers, even if it's not your first rodeo. And if you're new to my channel, my name is Meredith. I'm a mortgage broker. I put out educational videos every single week, so make sure you hit that subscribe button so you get notified every time I put a video out. So this is who FHA is actually for, and most buyers get this wrong. It's not just for first-time homebuyers. You can actually be a second, third, fourth home down the road, and you can actually have several FHA loans held at one time, but there are rules and some restrictions that comes with it. This is a most recent change within the last year. It's only for US citizens and permanent residents. If you're a non-permanent resident, then you'll have to go with a conventional loan. Now, here are the requirements. So FHA, it's for buying primary residence only. So you must live in the property for the minimum 12 months. And this is not an investor loan. Again, it's only for primary residents. And here's a long-term strategy. So FHA is more flexible in getting into a home versus conventional and some of the other loan types out there. So use FHA loan, get into the home, live in it for 12 months, then move out, rent it out, and complete that process. When it comes to the down payment, here's some low down payment options, which is one of the biggest benefits of FHA loans because the minimum down payment is 3.5%, whether you're a first-time home buyer, whether you've owned several homes in the past. So on a $450,000 home, that down payment is going to be $15,750 because it's 3.5% of the purchase price. Now you can get a grant or down payment assistance program. You can couple it with an FHA loan to help cover that down payment so you're not having to bring that to the closing table. And with these grants and down payment assistance programs, most of them are designed for first-time home buyers. There are a few out there that you don't have to be a first-time home buyer, but the majority are. And some of them are actually true forgivable grants that you don't have to pay back. Others are more like deferred loans, and if you ever go to sell or refinance, that money has to get paid back. But they're all designed the same way that they're going to cover the required down payment. So if you're looking into one of these programs, just make sure you really understand all the stipulations up front. And how to get access to a lot of these programs. So not all lenders offer the same options. And if you go with a mortgage broker like myself, they're going to have the most options when it comes to grant, down payment assistance programs available because they're not, as mortgage brokers, they're not tied to one single bank. And what a mortgage broker can do for you is with one credit pull, with one application, they can look at multiple programs and really find which one is going to be the best one for you. So FHA allows the lowest credit score among all the different types of loan, but that doesn't mean the bank is going to take that low of a score. So FHA, they set the minimum score to 500, but then you have the lenders and banks, they have their own set rules, requirements that's on top of that. So really, the minimum credit score when it comes to all the banks out there is really going to be a 620. Now, below a 620, if they do allow that, then they're going to kill you on the rate and the fees, and they're also going to require a lot higher down payment than just a 3.5%. So a smart long-term move is if you're below a 620, work on getting it to that minimum threshold because that's going to save you a lot more money long-term. And plus, a house is going to be one of the biggest purchases you'll ever make. So you want to make sure that timing matters most, better than rushing. And I just helped a client, his credit score, he came to me, he had a 580 score. We looked at his credit report. He told me that he had a recent collection that just hit. So I told him, go delete that, get that collection deleted. He did that, and within couple weeks, his score jumped up from a 580 to a 660, which he's going to get a lot better interest rate. He's going to save a lot more money doing it that way. So FHA allows you to buy a lot more home than going with another loan type. And the reason for this is called debt to income ratio. You can qualify for a lot more with an FHA loan versus conventional loan because if you have a lot of monthly debt, FHA will allow you to hold more monthly debt when it comes to other loan types. So you can have same income but get two different pre-approval outcomes when it comes to different loan types. And FHA debt to income limits is they'll allow you to have up to 50% what called DTI. That just means that 56% of your monthly income can go towards your monthly debt. And conventional caps this at a lot lower amount. So when it comes to an FHA approval with a higher debt to income limit, you're able to qualify for a lot more. Now, keep in mind that just because the bank allows you to go up to a certain amount, that doesn't mean it's a smart financial decision for you to take that amount. So at the end of the day, you know your situation best. And you really need to understand how mortgage insurance works when it comes to FHA, because a lot of times lenders don't explain this to their clients up front. And mortgage insurance is a lot different when it comes to FHA, because you'll have to pay for this in two ways. Number one, you have an upfront fee that you'll have to pay. And two, you'll also pay monthly mortgage insurance on a monthly base. And when it comes to conventional, if you're putting down less than 20%, you only are paying mortgage insurance on a monthly base. They do not have this upfront fee. And the upfront mortgage insurance, it's 1.75% of the loan amount. And what they do is they can roll this into the loan. So really you're financing more. So on a 350K home, 1.75% of that is you're going to be rolling about $5,900 into the loan amount. Now, this will eat up your equity, and when you go to sell, your payoff amount is going to be higher than if you went with a conventional loan and put down the exact same amount, because again, conventional does not have this upfront mortgage fee. Now, when it comes to the monthly mortgage insurance, is if you put down less than 10% on an FHA loan, that's going to stay, that mortgage insurance is going to stay for the life of the loan. If you put down 10% or more, that mortgage insurance will fall off once you've reached 11 years. And with conventional, it works totally different. Even if you put down 3%, even if you put down 5%, the mortgage insurance automatically falls off once you've hit 20%. Now, with FHA, the only way to remove that mortgage insurance is going to be to refinance into a conventional loan. And this is one of the biggest FHA loopholes, and this is something that I wish I did when I first started out. So I wish I would have started with a multi-unit property instead of buying a single family home, because FHA, they allow you to buy a 2-unit, 3-unit, up to a 4-unit property. And as long as you live in one of the units, then you only need to put down 3.5% versus a regular 20%. And then what you do is you let the tenants pay for everything. So you rent out the other units while you're living there, and that will help supplement your mortgage payment, and it will also help pay for the other costs associated with the home. Then you turn this, after the 12 months, you turn it into a cash flowing asset, because what you can do is once you've lived in it for a full year, you can move out, rent out that other unit, and then you can really start making a profit. So FHA doesn't kill deals, the actual property itself does. And the reason why FHA deals falls apart is because the condition of the home must meet FHA requirements and guidelines. So if the home has any like exposed wiring, any peeling paint, if the roof is damaged and is leaking, basically if there's any health or safety issues, then what happens is the FHA appraisal will call it out and the loan pauses at that point. And the only solution to this is the seller must fix this and bring it up to the FHA guidelines before you can actually close on the loan. And overall, when it comes to property types, you can buy any type of property type with an FHA loan: manufactured home, multifamily, townhouse, condo, single family home. The main thing is the condition of the property must be in good standards in order to do an FHA loan on it. And here's some of the non-negotiables when it comes to an FHA pre-approval. So what's required is, again, minimum credit score is a 620. You need to have income, so you need to have a 2-year work history, and you need to have savings in the bank. Even if you get down payment assistance program to cover your down payment and get the seller to cover all of your closing costs, and you bring $0 to the cash to close, which is how I've helped several clients do this, you still need to have at least a couple months of the mortgage payment saved up. And two, here's some of the documents that's required up front. If you are a W-2 worker, means that you work for someone, then you are going to need at least 30 days of pay stubs and your W-2s for the last 2 years from all jobs. If you are self-employed, you own your own business, or you're a 1099 worker, then we'll need your last 2 years of tax returns. And also we'll need last 2 months of bank statements and the driver's license. And the overall timeline of getting pre-approved is the actual pre-approval process takes anywhere from 24 to 48 hours, maybe even quicker if you have all of this ready to go up front. Then during that pre-approval, they'll look at your credit, we'll tell you exactly how much you're approved for. You'll go over monthly payments, scenarios, and you'll know exactly how much money you need to bring to the closing table. And then at the end of it, the lender will give you a pre-approval letter, and that allows you to start going out and house shopping with a realtor. So if you're planning to buy a house and you'd want my help and know how much your buying power is, click on the link in the description, schedule a call, and I'll be in touch.